To understand the recent surge in Apple's stock, we need to go back to the moment Apple announced its fiscal second quarter earnings. The tech giant reported better than expected earnings despite a 4% decline in revenue from the previous year. Net income may have been slightly down, but diluted earnings per share increased. This was a welcome piece of news, especially considering the company reported a record high services revenue amidst a drop in iPhone sales. Apple's Greater China business also experienced a decrease in revenue. This was a significant factor to consider, as the stock had lost 10% of its value earlier in the year due to concerns about the iPhone business and weakness in China. The announcement that truly turned the tide was Apple's revelation of a $110 billion stock buyback program. This move signaled a strong vote of confidence in the company's future prospects, and the market responded with enthusiasm. As the news spread, Apple's stock surged in after-hours trading. This was a remarkable shift given the economic climate at the time. Investors were grappling with an economic slowdown, inflation concerns, and speculation about a slowdown in interest rate hikes by the Federal Reserve. Despite these challenges, the positive earnings report from Apple, coupled with the announcement of the sizable stock buyback program, was enough to cheer investors. This led to a surge in U.S. stock futures, with S&P 500 futures up by 0.79% and NASDAQ 100 futures up by 1.17%. The ripple effect of this announcement was felt across the markets. European stocks rose, while Asian equities fell after China's Politburo did not approve more stimulus. The dollar weakened as U.S. bond yields cooled down. In summary, the surge in Apple stock can be attributed to a combination of factors. The announcement of better-than-expected earnings and a $110 billion stock buyback program played a significant role. Despite initial concerns about the iPhone business and the economic slowdown, the market responded positively to the news, leading to a surge in stock prices. So the next time you see a surprising shift in the stock market, remember, it's often a series of interconnected events that lead to such changes. And as always, keep an eye on those earnings reports. They can often provide a glimpse into a company's future prospects.